The starting position is where you commence your financial planning journey. It is important you take extra care the first time you use the starting position so that you do not misunderstand what is required. After completing the starting position, you can generate the starting position report, which gives you a detailed analysis of your current financial position. The information in the starting position is then imported into your plan. This plan will give you the opportunity to see your financial future. To commence, you should go to the starting position. It is most important to identify whether it is a single or a joint plan. If you are planning for a couple and you don't select joint, then you will not be able to assign salary, assets and loans to different people or nominate when the account is owned jointly. For our overseas clients, you can select the currency for your country and that symbol will be used for all your plans. For each section there is an inline help. Please take the time to read each of these the first time you use the starting position. It will be time well spent and prevent you from making incorrect assumptions as to what is required. The first entry is your current salary. Include how long you expect to be working. The software defaults to increasing your salary at the inflation rate. Once you've created your plan, you can adjust how you increase the salary and add more salaries if you are expecting future changes. If you wish to include personal assets, these are not imported into the plan. They may be important if you're applying for a loan using this report, as the lender may want to know this information. Everyone hates making a budget, but if you want to really start making a difference to your ability to create wealth, you should take the time right now and make a proper budget. Tick which items are optional. You may need to adjust these later if your living expenses are too high. For this demonstration, we are just going to make a budget of one annual amount of $60,000. Milestones and goals are lifestyle events such as taking a gap year or planning a major purchase such as buying an investment property. There is a drop-down list of suggestions, but you can also use the blank field to enter other events. The transaction account is like a checking account. In financial mappers, all the personal and living expenses transact through the budget and all the investment, home ownership and superannuation transact through the transaction account. In this example, John and Mary own a home which has a 15-year loan which is a principal and interest loan. John has an investment property with an interest-only loan. When he enters the plan, he can include more options for this loan when it expires in 5 years' time. Note that each property can have one loan linked to the asset. However, additional loans can be added by clicking on the link icon. There are 3 types of cash accounts, but sometimes if you want to keep things simple, leave all your interest-earning assets in the transaction account. John has a share portfolio with no loan. Mary has a managed fund. Personal loans and credit card payments are deducted from the budget. Mary has a car loan. They jointly have a credit card debt. Only debt which is not repaid at the end of the month should be entered. The program allows you to repay your credit card debt, but after that you cannot add more credit card loans in the plan. In the retirement assets, you can enter your superannuation. If you have a self-managed superannuation fund, then you will have to enter this manually into the plan. This account has a 2-step process. First, you must enter the details of your superannuation accounts. You must save that information and then select which account will receive your employer contributions. With insurance, you can enter any life and/or TPD together with trauma and income protection. Note that you must nominate the age. Unlike other values, these are not indexed. The last section is the most important, as you must nominate how much you plan to spend each month on additional home or investment loan payments, plus any other amount you want to save for other investments, including personal superannuation contributions. The program will automatically add this amount to the cost of your loan payments net of any rent. This is just an approximation, as you've not entered detailed information about the investment returns for your real estate. The personal loans are not included in this calculation. Once all this information is entered, the program calculates what percentage of your gross salary is to be saved and allocated in the investment plan. This is entered into your salary account in the plan. Once all this information is completed, you can create the starting position report. It is important that you generate this report so that you can check that you have entered all the information in the correct area. If your version of the software has been provided by a third party, you will have a second section called About Me and My Family. If your financial advisor has provided you with the software, this information will assist in giving the advisor the background information about your family situation, your tolerance to risk, and preferences to investing. Listing the main financial objectives you want to achieve over the next 5 years is also important, not only for the advisor, but for you to focus on what you want to achieve over the next 5 years. If you are working independent of a financial advisor, then this information will be important if you want to reach out to your professional support team, such as a mortgage broker or an accountant. This information is imported into the starting position report. This report is very important and is a document you may wish to share with your financial advisor, accountant, lender, or mortgage broker. Let's review each page of the report. Page 1 shows your net assets and the asset allocation. Page 2 gives you the details of your assets, pension funds and liabilities. Page 3 shows your salary, living expenses, insurance, together with the salary allocation to your investment plan. The last entry is the unallocated funds. This will include any tax due on your salary and investments, together with items you may include in the plan. For example, you may want to set up a savings plan for your lifestyle goals, such as saving for your next car. You have your milestones, insurance, together with your loans and credit cards. This is important information for your financial advisor or mortgage broker, as they may be able to recommend better loans. If applicable, an additional page will list the information written in the section About Me and My Family. Now you or your advisor can create your plan. On the My Plans page, select the option to start a new plan from starting position. All the information is imported and you are ready to start making your plan. See how the salary information is already imported? If you go to the home, you will find the details have been entered about your home and its loan. That concludes the discussion about the starting position and the starting position report.